Hello traders, it is Sunday, August 25th, and it's time for our weekly video. I took a couple of weeks off, been a little bit light on the videos recently, much rested, ready to go. So let's take a look at my last pick. It came out during the last event, Wednesday. DELL, that's actually a stock that I highlighted before I left for vacation. I still like it as a short. You can see in the right hand corner, this is a daily S&P 500 chart, SPY if you will, big market bounce. What did the stock do? Yeah, sure, it bounced a little bit, but it is sitting right at that 200-day moving average. It hasn't been able to advance the last week when the market has actually made nice advances. So any type of market weakness, I feel that the stock is going to poke back below the 200-day moving average. That is where you would be looking to take a short position, but we need to make sure that we have market weakness. Right now, we don't have that. So how do you know if we have market weakness? Well, at minimum, I'd like to take out the open from this candle right here, and that was 548.88. Let's call it 550. We need to take that level out, then we've got a chance to fill this gap and test the 50-day moving average and AVWAP-Q. So at minimum, we've got to get through that, and Dell has to get below that 200-day moving average. Then I think you've got a pretty decent short setting up. So let's get into market analysis right now, and we'll take a look at what's happened over the course of the last month. We've had a lot of market volatility. Here's my takeaway. We're going into seasonal weakness right now. We had this peak right here that coincided with earnings season. After all the mega cap tech stocks announced earnings, what was the market reaction? It sold off. We also had the FOMC statement. That didn't produce any excitement. We also had a lot of economic releases, and they were actually quite soft. So the market sold off. We had about a 10% drop in a little more than 3 weeks. And then we got this big bounce. Well, that bounce was related to the notion that the Fed is going to start cutting rates. Powell said as much, but the statement that he made Friday during the Jackson Hole Symposium did little to satisfy me. If I were go bullish, gotta have it, market near an all-time high, stock valuations fairly stretched, what I would have been looking for out of him personally is, yes, we are leaning towards cutting interest rates a quarter point in September. That's not what we got. And I was a little bit shocked at how well the market held up Friday, because what he said was the path is clear. Well, what does that mean? Yes, they are more inclined to start cutting rates. That's no big surprise. We already knew that. What, are they going to hike rates? No. They're at a pause right now. So yes, of course, the next natural move is going to be to cut rates now that inflation is starting to abate. But simply because inflation is abating, that doesn't mean that they're going to aggressively start cutting rates. They got it wrong the first time. They have been stubbornly hawkish. The last 2 years, we've heard the Fed say, we're going to stay the course 2 years ago. We're going to keep raising rates. And they did. And the market was actually looking for them to pause 2 years ago in September. They got it wrong. Last year, everyone was looking for a September rate cut. Didn't get it. At best, we got a pause in November, and that's what caused the really nice market rally that we're currently in. So now everyone's expecting the Fed to cut rates in September. Economic data points, they've been pretty solid. Yeah, we're seeing a little kink in the jobs number, the last jobs number that came out. Yes, last week we heard that there were 800,000 fewer jobs that were created from the period from April of 2023 to March of 2024. So yeah, that's a substantial decrease, but it's kind of old news. I mean, that's like 6 months ago. So the market took it in stride. If anything, the market felt that, hey, this just puts the Fed one step closer to cutting rates in September. And from my perspective, if I look at the price action technically, we've got this nice all-time high right here and a big decline off of that all-time high. Okay, that's a warning sign. That's a sign that there is some selling pressure, and that is also a sign that we are not in go-go, buy, gotta have it mode. If we were, that news would not have sparked that level of selling. The market would not have dropped that far. You would have seen maybe a test of the 50-day moving average, and then we would pop right back and make a new all-time high. It's not what happened. We got a pretty considerable sell-off. Now, you know that I've been fairly bearish over the course of the last month or so, but I haven't acted on it to any large degree. I had some starter short positions on before I went on vacation, and I'd mentioned in my previous video, here's what I'm looking for. I'm looking for a bounce. I'm expecting a bounce. The nature of that bounce is going to help me identify the level of selling that we currently have. And I was looking for the market to rest right around this VWAP-Q level, 50-day moving average, mixed overlapping candles, struggle to get through, just can't get through. That's the type of price action that I was looking for last week. So this bounce absolutely was looking for it, but we didn't get that weakness here. Instead, we kind of flew right through it, and the market is within striking distance of the all-time high. We're about 35 points on the S&P 500 from an all-time high. So this is not particularly weak price action. So my bearishness has been tempered. And I often have people ask me, how do I know when my market thesis is wrong? How do I know when I need to shift or adjust? Well, this is a classic example of it. Get the big drop. We're looking for that back in here. We got a nice rebound. It was taller and quicker than we expected. That tells us that there's more buying than we thought was out there and less selling pressure. So that means that you adjust your bearishness. And okay, right now I'm kind of neutral to slightly bearish, where before I was pretty dang bearish. If we got that resistance right in here at the 50-day moving average and AVWAP-Q, and we started to roll over here, I definitely would have been taking some swing short positions under the notion that we are going to test that 100-day moving average with ease, break it, and perhaps even test the 200-day moving average. As my thesis is proven correct, I start adding below the 100-day moving average. That's not what we got. So I'm still in day trading mode, waiting. Pete, how can we be waiting so long? Well, you have to bear in mind, this is August. This is a seasonally light period. You've got traders who are taking vacation time. You've got Washington, D.C. in recess. You have the Fed in recess. So there's not a lot of news to really drive the market right now. One observation is that on this market decline, you can see the volume was quite heavy. On this market rally, the volume was quite light. Okay, so that tells us that there is a bit more selling pressure than there is buying pressure. By the same token, though, you're not going to lift off like this. So let's say that there's resistance. Asset managers are worried about the economy. We're going to go into a recession. I need to reduce some risk. Here's what you would see in that scenario. You would see this drop, you'd see the bounce, then you'd see resistance here, because asset managers see this as a good place to unload some more risk. So they're offering stock and offering stock and offering stock. And that is why the market can't get through this resistance level. And that's what tells you that when it starts to roll over, you should be favoring the short side, because you know asset managers are looking to reduce risk. The fact that the market was able to rally tells me that these asset managers are not that aggressively looking to reduce risk. We never would have had this next leg higher last week. And even last week, I had mentioned to my members This week, okay, so we got this nice little move here, this breakout above AVWAP-Q and the 50-day moving average. And I didn't really expect that that was going to happen. I wasn't overly positioned on the short side. I'm just looking for clues that the market is weakening. So last Sunday I said, I want to see during the week, I want to see us come down and test that 50-day moving average, and I want to do it before Friday. Because I don't think the Fed is going to give the market what it wants. Which that part is actually true. Really was not a very convincing statement that yes, the Fed is going to be cutting rates in September. Absolutely didn't indicate that they would be cutting rates again this year. No, we're going to sit back and we're going to watch the data points. And so right now the market is kind of addicted to the Fed cutting interest rates. We also have economic data points coming out. And I think that if we see a weak economic data point between now and September, so let's say the jobs report comes out weak in 10 days or so, then yes, traders could get a little nervous that the Fed is not going to cut rates, and then we could see a little bit of a pullback. But if the unemployment numbers come in decent, well, then we're kind of back in that, the market's good, the economic activity is stable. We're kind of in wait and see mode again. I wish I had something more concrete that I could tell you. I really don't, because we wanted to see this nice big drop and we wanted to see that resistance, and we didn't get it. Now we're floating higher again, and we're kind of in that neutral malaise where don't know if we're going higher, don't know if we're going lower, who's going to win the election, what's the Fed going to do? So we've got to stay in day trading mode. And so I'm going to give you a bullish pick this week, and I'm going to give you a bearish pick this week. But I wouldn't be doing a lot of swing trading. I would still be focusing more on day trading because we've seen a lot of market volatility. We know that buyers and sellers are active. We just don't know which way the next move is going to come. If you had a gun to my head and I had to pick one way or the other, okay. I see enough evidence that tells me that there should be some selling pressure in here. We had this long red bearish engulfing candle on Thursday. I was looking for some type of negative reaction Friday, especially given the comment from Powell on Friday. We didn't get it. We didn't get that sell-off. We didn't get that follow-through. But when you see these long red bearish engulfing candles close to an all-time high, yeah, that tends to be a little bit bearish. So there will be some that say, oh, wait a minute, Pete, look, the market rallied on Friday. That's good news. Now we should be able to challenge the high and break out. Well, this is fairly common when you see these long red candles, just like this one right here that we saw back in April. And then look at the next day. Oh, that's a nice green candle. Looks like the market's going to bounce right back. And then you get a little bit of follow through the upside. And we retrace a lot of that red candle. And then you get the next leg lower. It's very possible in here. And so with the Fed being in recess and with the market not getting the warm fuzzy that it was supposed to on Friday, I think we could see a little bit of selling pressure this week. That's what I'm going to be looking for. But every day is going to be day to day. And I'm just going to evaluate the price action, see what happens, stick to my day trading, try and find a few good opportunities each day. As far as news, we're in a news vacuum right now. The biggest economic release this week is durable goods orders. Great big nothing burger there. We do have earnings coming out from NVIDIA Wednesday. That will be big. So keep an eye on that. That really is the biggest news of the week. We haven't seen mega cap tech stocks rally very much since announcing earnings. So are we going to lift off? Is NVIDIA going to lift off after this earnings announcement? I don't know. I'm a little doubtful. I'm not looking for it to rally. I'm not looking for it to sell off. I think we're just still in this malaise, kind of just march forward and see how things play out. So stay flexible, focus on the short term, day trades, maybe a few overnights if you really see some good intraday momentum that you think will have follow through the next day. So let's go through and take a look at some searches. I'm going to go into green royal flush. I'm going to keep this video fairly short. I don't have a lot to tell you. I don't know which way the market's going to go. So let's just go find a few good stocks. So I went into green royal flush. And by the way, you'll see our buy and sell signals on the chart. Sell signal, buy signal. On a daily chart, we pivot. So you don't see any exits. When we're looking at shorter term charts, you will see blue exit arrows as well. As I go through the list here, there's some nice stocks. GS is a nice little breakout right in here. I like that. It broke out through that little horizontal resistance level. It's within striking distance of the high. Low also trying to get through a horizontal resistance level. So that looks, okay. Harry highlighted 3M on Wednesday during our live event. We figured we'd give you a long and a short because we don't really have a lot to go off of with overall market direction. I like that breakout. That was a really nice pick by him. But I don't want you to think that we can't find more than one bullish stock. So I'm going to keep looking. And as I went through the list, all I'm doing is I'm looking for a buy signal for our trade signals across multiple time frames. All of these stocks have that characteristic, and there are many good candidates actually in there. I like Abbott. Abbott has a nice little breakout through this horizontal resistance level. That is a high minus trend line. It's above all the major moving averages. It broke out, came back, and it tested the 200-day moving average, and now it's been able to continue to move higher. This is not a fast moving stock. This is more of a grinder. But I do like the fact that even during this market decline, the stock was able to hold support. It did not fall with the market. As soon as the market started to bounce, this stock had really nice upward price action, and it's through this horizontal resistance point. So it has relatively low option implied volatilities. So what you would want to do on a stock like this is give yourself lots of time, buy October options, go in the money, maybe the 105 calls. That's going to be a surrogate stock position. Expect the stock to chop around a little bit in a tight range, nothing drastic, no big huge drops or anything, and then just inch higher. And in that scenario, you're really just looking for the market to kind of tread water here and poke and maybe test that all-time high this week. That would be a good backdrop for Abbott. As long as the market doesn't have any follow-through where it takes out the low from this long red candle, and that low is, call it 555. As long as the SPY stays above that, Abbott's going to be a really nice long position. If I go into our bearish searches, I went into SMA. This is a cross below the 50-day moving average, or below the 100-day moving average, or below the 200-day moving average. So previously, these stocks were above those major moving averages. Friday, the stocks moved below those major moving averages. Very effective search. And so as I go through the list here, I'm just looking for any of these stocks that are showing me a nice attractive pattern, some technical weakness. Micron is one that I really like. And you can see how the stock did bounce with the market. Much like Dell, the last leg of the market rally, the stock did not participate. As soon as you get one little bearish day in the market, blam, we see some profit taking in Micron. Friday, the market finished higher. Stock closed below that 200-day moving average. So the way that I'd be trading this, and again, this is a semiconductor stock, so day trade it Monday, Tuesday, Wednesday. You've got to be a bit careful because Wednesday after the close, you have NVIDIA earnings. So it'll really be up to you as to whether or not you hold this stock position over that earnings announcement. But the more important aspect is also, what is the market doing? If the market is below that 555 level on the SPY, and if this stock is showing relative weakness, which it has been showing for a very long time, this is going to be a nice short position. And you can go out and buy October in the money put options. Last week, I believe I bought the 115 puts. I think they were somewhere around the $10.60, 70 cent range. But the point is, go deep in the money. Give yourself lots of time for the trade to work out. So I'm not buying weekly options. I'm not going into September options. I'm going even further out in time than that, because if the market cracks down, I feel that this stock will have more than just 1 or 2 days when you want to hold a position. You'll have perhaps even a week when you'd like to hold a position, and you don't want to have time decay working against you. If you go out in time, it won't be a factor. So those are a couple of trades that I like. I like Abbott on the long side. I like Micron on the short side. I think either one of these stocks can be day traded depending on what the market is doing in that given day. If we get a breakdown below that 555 level, and if Micron continues to show you some weakness, then you can go out and buy some puts that are in October, go out a couple of months or so. What would I do if the market broke out to the upside? We get through this all-time high and we blow through it. Well, I think Abbott's going to be a really good stock. I think that stock's going to perform well. And as I mentioned earlier, same type of strategy. You go deep in the money on that one, go to the 105 calls in October, deep in the money, and look for it to grind higher. I would be more cautious on the long side. The seasonality, the reaction that we've seen to previous Jackson Hole statements, the fact that the Fed didn't give the market what I think it wanted, which is a definitive, yes, we are cutting rates in September. All these things start to kind of pile up. This long red candle right here below the all-time high. These are warning signs. So I'm a little bit more bearish, but not overwhelmingly so. Thanks so much for watching, everyone. We're going to be trying to release a new version of Option Stalker Pro this week. I should just flip through a bunch of charts, but you can see there's a nice buy signal here, nice sell signal here. S&P 500, let's kind of go into that. We'll go into a 1 hour chart, and you can see that would have been a losing trade right in there, but the system comes back with a really nice winner in here. So, you know, if you go back and look at how the system has performed historically, I think you're going to be really impressed and excited by the trade signals that we've got coming out right now. Same thing on the stocks. If you've got a stock that's choppy and it's in a compression, a trading range, doesn't matter what indicator you're using, it's not going to be very reliable. You're going to get false signals. But this will give you another level of confidence when you're trading stocks that are starting to trend, starting to show some directional bias. So I'll do a video exclusively dedicated to these trade signals where I'll go through various charts that you suggest during the live event, and I'll take a look at multiple time frames. I do not want you to think that I am cherry picking. These signals are really excellent, and I think they're going to become a primary trade consideration for many of you, but it's going to take time. You've got to build trust and really be able to lean into these signals and have multiple successes before you can do that. So watch for that. We are going to be doing a live event on Wednesday. So when you're on the YouTube channel, please make sure to watch for those live events. And by all means, if you like the content, click the thumbs up button, subscribe to the YouTube channel. All of that helps us reach a lot of traders who are also trying to hone their trading skills and get better. And that's My ultimate goal is to reach as many of you as I possibly can. Thanks so much for watching. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.